Hey guys, and welcome to Money Talks News, the podcast. It's a podcast that just tries to make you a little richer one day at a time. And boy, do we have something to talk about today. As I sit here, the market is down. The stock market is down 3% in the Dow, 4% in the S&P 500, and almost 5% in the tech-heavy NASDAQ. What the heck's going on? This is a great lesson for us. Listen, I've been doing this for 40 years, investing in stocks. This is not my first rodeo. I've seen this happen many times before, so I'm going to help talk you through this. First of all, the main thing is do not panic when the market falls like this. The market's falling because of the Trump tariffs, but really, in the great scheme of things, it doesn't really matter why the market falls. The market's going to fall every now and then, and this is an opportunity for you to make extra money. But step one, do not freak out. If you are freaking out, you may have too much money in the stock market, which brings me to point number two. This is an opportunity to take a look at what you have invested and see if you're in the right place and see if you've got too much in the market. Because if you can't sleep at night, either you're not used to declines like this, or you need to reduce your exposure to stocks, because this market is going to continue to be volatile. Anytime there's a market fall like this, it's going to continue to be volatile for a while. One of my coworkers just asked me a few minutes ago if now's the time to buy. It could be, but I'd wait a little bit. Usually situations like this one, where the world is in turmoil because of Trump's tariffs, situations like this may take some time to resolve. Do not jump in with both feet right now. Sooner or later, I may give you different advice, but at this moment, don't jump in with both feet. Another thing is you can look at alternative investments too. Gold has been hitting new highs every day, and that's because gold responds well to market turmoil. So when there's political or inflation, any number of things, gold can act like a hedge against stocks. So I'm not saying you should rush out and buy gold now because, like I said, it's at highs. But keep an eye out in the future for things that will help you diversify away from stocks. Now, this is the most important thing I want to tell you. This is going to be a short podcast. In 2009, in fact, in March of 2009, so what's that, 16 years ago? The market was down horrible. Remember the Great Recession? Well, if you don't, it was horrible. Okay, the market was crashing. And what I did, not that day, this took place over a series of weeks, but what I did was I started accumulating stocks that I wanted. As a result of that, I put about $125,000 into stocks. And I did it when nobody else was willing to buy. I mean, I actually got to the very bottom of the market. That was blind luck. Even the blind squirrel finds the occasional acorn. But I happened to get in at the bottom. I put in about $125,000, and I made $600,000 since then. This is an opportunity. Not today, when the market falls. I haven't been buying stocks all year. Why? Because the market was overvalued. The market's still a little overvalued, so I'm not buying now. But when the market gets really undervalued, when everybody is afraid of the stock market, when all there is to invest in is shotguns and canned food, that's when you want to start buying stocks. So what I want you to do today is I want you to start, if you were a stock investor, I want you to start making a list of the companies you'd really like to own. And I want you to keep your eye on them. And maybe you can buy a little bit now, a little bit. Like if you're going to put in $100, you'd put in $25 now. And maybe not even now, but soon. And then keep an eye on it. If it drops more, add more. And then that way you can develop some good stocks. Stocks you thought were too expensive and probably were a few weeks ago might start looking really attractive. If you're a person who invests in the S&P 500 index fund in your 401k, same thing. Buy a little bit as the market goes down, keep some powder dry, and then buy some more as it goes down more. And that way, even if it turns around and goes straight back up, at least you got something in. So try to do that if you can. Don't panic. Make a shopping list. Ease in. And this is the time. I always say, when times are bad, this is when wealth is created. It sounds opposite, but it's true. When the market's really high, that's when smart people ring the register. That's when they booked their profits, but they made their profits when everything sucked. And so keep an eye on the market. Keep an eye on what's going on with tariffs. My suspicion is that there's going to be some negotiations, and so it may not look as dark, in a couple of weeks as it does now. But do that, and I will guarantee you that you will end up being happy. A little bit at a time. Don't freak out. If you've got too much money in the market, learn a lesson from that and get your shopping list, guys. Get it together, because this is the time when you're going to make money over the long period. Okay? You know what's going to happen over the short period? Me either. Nobody does. But over the long term, buying when things are low It's the way you make money. And that's about all I've got to tell you today. If you like what I'm telling you, then subscribe to the podcast, tell your friends, join me because we need some more subscribers. I really appreciate you guys being here. Good luck. Keep an eye on the market and watch this space. Talk to you soon. Have a good one.